Give me a strategy how to beat inflation. Beating inflation requires a smart financial strategy that protects your purchasing power and grows your wealth over time. Here are some key approaches. Invest wisely. Inflation erodes the value of cash, so consider assets that historically outpace inflation, such as stocks, real estate, commodities, and inflation-protected bonds. Increase income streams. Diversify your earnings through side hustles, passive income, or career advancements to stay ahead of rising costs. Reduce debt. Prioritize paying off high-interest loans and switch to fixed-rate debt to avoid rising interest rates. Cut unnecessary expenses. Adjust your budget by eliminating non-essential spending and finding ways to reduce energy and living costs. Build an emergency fund. Inflation can lead to unexpected price hikes, so having a financial cushion helps maintain stability. Reassess pricing and spending habits. Businesses and individuals can adjust pricing models and spending behaviors to counter inflation's effects. Would you like help finding inflation-resistant investments or budgeting tools? Edit this response with examples. Beating inflation requires a smart financial strategy that protects your purchasing power and grows your wealth over time. Here are some key approaches with examples. Invest wisely. Inflation erodes the value of cash, so consider assets that historically outpace inflation. Stocks. The S&P 500 has averaged 10% annual returns, beating inflation. Real estate. Property values tend to rise over time, providing a hedge against inflation. Commodities. Gold and silver often retain value during inflationary periods. Inflation-protected bonds. Treasury inflation-protected securities. Tips. Adjust with inflation. Increase income streams. Diversify your earnings to stay ahead of rising costs. Side hustles, freelancing, consulting, or selling products online can boost income. Passive income, rental properties, dividend stocks, or royalties provide ongoing earnings. Reduce debt. Prioritize paying off high-interest loans and switch to fixed-rate debt. Example, if you have a variable-rate mortgage, refinancing to a fixed-rate loan can protect against rising interest rates. Cut unnecessary expenses. Adjust your budget to counter inflation. Example, buying in bulk, switching to energy-efficient appliances, and reducing discretionary spending can help. Build an emergency fund. Inflation can lead to unexpected price hikes, so having a financial cushion helps maintain stability. Example, keeping 3 to 6 months of expenses in a high-yield savings account ensures financial security. Reassess pricing and spending habits. Businesses and individuals can adjust pricing models and spending behaviors. Example, companies may increase prices gradually rather than all at once to maintain customer loyalty. Would you like help finding inflation-resistant investments or budgeting tools? Edit this response. How to start step by step. Starting your journey to beat inflation step by step requires a structured approach. Here's a simple guide to help you take action. Step 1. Assess your finances. Review your income, expenses, and savings to understand where your money is going. Identify areas where inflation is impacting your budget the most, e.g., groceries, rent, utilities. Step 2. Create a budget. Adjust your spending by cutting non-essential expenses, e.g., subscriptions, dining out. Prioritize essential costs and set aside money for savings and investments. Step 3. Increase your income. Ask for a raise at work or explore side hustles like freelancing or selling products online. Consider passive income sources such as rental properties or dividend-paying stocks. Step 4. Invest wisely. Put money into inflation-resistant assets like stocks, real estate, commodities, and treasury inflation-protected securities. Tips. Diversify your investments to reduce risk and maximize returns. Step 5. Reduce debt. Pay off high-interest loans first to avoid rising costs. Switch to fixed-rate loans to protect against increasing interest rates. Step 6. Build an emergency fund. Save 3 to 6 months' worth of expenses in a high-yield savings account. This helps you stay financially secure during unexpected price hikes. Step 7. Adjust spending habits. Buy in bulk, use coupons, and switch to store-brand products to save on groceries. Reduce energy costs by using energy-efficient appliances and adjusting thermostat settings. Step 8. Stay informed and adapt. Keep track of economic trends and adjust your strategy accordingly. Regularly review your budget and investments to ensure they align with inflation rates. Would you like help finding inflation-resistant investments or budgeting tools? You can also check out this guide for more strategies.